Wanted to pick up on the topic we were just discussing there with Eamon, trying to trade. I mean, you export a lot of your output, some of which to China. Have you seen a meaningful slowdown in demand from China? And do you think, if so, related to the trade war?
It's a great question, Wilfred. We export about 27% of the products we make in the U.S. all over the world. About a third of that goes to China and other parts of Asia, but mostly to China. And also, a lot of our U.S. customers send some of their products to China. So we have a direct impact and an indirect impact. And we have seen some slowing, generally related to the slowing of the Chinese economy. That's our direct impact for the products we sell directly to China. And then indirectly, some of our customers in the U.S. who export food and other products to China have seen some slowdown in their business, either because of the economy or in some cases because of tariffs. It's not material yet, but we have noticed it, especially in the second half of the fourth quarter.
You know, you sell everything from, what goes into baby diapers to what goes into industrial packaging. What are you seeing on the cost side of things? Are costs still rising, and are you going to have to pass that on?
So costs are rising, especially in the area of transportation and logistics. That's mainly a North American comment. And regionally, we have some issues with wood costs. It just has to do with weather and how easy or hard it is to go and harvest wood. And then we have some general energy and other inputs related to energy, like chemicals. We've largely been able to recover that through 2018. We'll have to see what happens as we go into 2019. I've often said, though, input costs that have some upward pressure in our business tend to go along with a stronger demand signal and a stronger economy. So we tend to be able to manage through that pretty well.
I guess, Mark, a lot of people would think that moves towards more environmentally friendly products and green products would be bad for a paper company, but you've developed new products that there's actual structural growth from that theme.
That's absolutely right, Wilfred. When you think about our business model, most of our products start with renewable natural resources, wood fiber and recovered paper fiber. We process that and make most of our own energy from the residuals, and that's carbon neutral biomass that generates our electricity to make our products. And then in many cases, take the corrugated box, 90% plus of corrugated boxes are recycled back into the stream after they carry out their use. So we have a very sustainable business model and a very sustainable actual end product.
I'm curious about your take on the U.S. economy, Mark, and the debate that's going on right now about whether we've seen the peak and how much we're actually slowing into 2019.
So as I think about the way we went through the fourth quarter, we had another strong quarter. The best example I have is our packaging business that puts boxes into almost every type of commerce. We have seen January still pretty strong against a very difficult comp from January of 18. I think some of the uncertainty around the trade issues you mentioned at the beginning and some of our domestic types of issues always add some concern. But right now, we still see a pretty strong economy from a consumer and consumption basis. And so I don't know any more than anyone else about how to predict the whole future on it. But what we see right now and in our order book still remains pretty healthy.
What about in Europe? That's the U.S. You mentioned China. What about in Europe?
So, Wilfred, Europe is a little bit slower. I think in our case, we are mostly in Southern Europe, so we're a little bit more insulated from some of the issues in Germany and France, and we don't have much in the UK, but definitely through 2018, Europe has slowed a bit for us, and I think that's just a reflection of the general economic activity.